Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shreyanshi Singh and Cheryl D'Souza, and this is the show where we get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the markets, and it does look like a sea of red and a select few sectors holding on to that tinge of green.
Absolutely, Shreyanshi, very good morning to you. And looks like your opening line has to be fixed for this entire week. Yesterday also you did say sea of red. Today also you're saying sea of red. But yes, there are some mild bit of good pockets or positive pockets in trade today. Case in point being the I beg your pardon, FMCG index. That's the one that's seeing a good fillip in trade today, because you have most of the gainers on the Nifty index from the FMCG pack, and that's one of the reasons why is the top sectoral gain, a 2% up move coming in for FMCG pack. But let's talk about what the benchmark indices are doing, because we've drifted lower from the opening levels as well. So that is the Nifty for you. There you go, near the day's lowest point, 0.5% down to coming in for the Nifty. Sensex as well moving in tandem. We are sub that 77,800 mark when you talk about the Sensex in trade today. Take a look at Nifty Bank. The pressure there is pretty immense. 1% down to coming in for Nifty Bank. Take a look at what SBI is doing, because that's the one of the counters that was seeing a sharp downtick in initial hours of the trading session, is holding on to loss of about 1.5% or so. You have HDFC Bank that is also adding on to the pressure when you talk about Nifty Bank as well as Axis Bank. So let's talk about how the advanced decline ratio is looking like, because right now it is a tad bit tilted in the favor of the declines as we speak. Talking about the list of gainers, then, like I said, is the FMCG pack ruling the charts in trade today. So you have Britannia, HUL, ITC, Nestle, all of them seeing really good crunch in trade today, bucking the overall market weakness. You have Bajaj Auto once again seeing good move of about 1.6%. Positive brokerage notes actually aiding Bajaj Auto as well in trade. M&M is the other set, or another counter that is seeing positive move. While on the flip side, it is L&T, the top loser at this point in time, 2.6% downtick coming in for L&T. You have Tata Motors, you had the JLR update coming in. Definitely the street is not too enthused about it either. The stock is down about 2.2%. You have ONGC, Tata Steel, Shriram Finance among the other set of losers in trade today. Let's talk about the sectoral indices then. Like Shreyanshi was saying that it is a sea of red. Indeed it is. But the one sector that is seeing firm up move is your FMCG index. Also, you have media that's seeing a shade of green at this point in time, while on the flip side, it is the PSU Bank Index, oil and gas, realty, metals, all of them actually sinking in trade today. So not great day coming in for the markets once again. You had an HSBC note as well this morning, where they've actually gone ahead and cut their weightage or rating coming in on the Indian stock markets, while upgrading the Hong Kong stock markets as well. So a lot of these moving parts actually weighing on the markets as we speak, with the rupee being at a fresh record low once again. It is actually nudging or heading towards the 86 to the dollar mark. Today you had the rupee that hit a fresh record low of around 85.92 to the dollar. So when you talk about the macro setup, at least when you talk about the forex setup, not that great. You have the dollar index, which is actually showing strength. That's adding a pressure on the Indian rupee as well. While if you talk about the benchmark indices, we're seeing FI selling actually adding on to the pressure, Shreyanshi.
Well, absolutely. And other than the ones that you've mentioned, in fact, Cheryl, when you take a look at some of these banking counters as well, be it the heavyweight HDFC Bank, SBI, a whole host of these banking counters also taking it on the chin. When you take a look at Nifty Bank as well, 1% downtick is what you're seeing there as well. So that largely is the setup and what it's looking like this morning. But with that, let's kickstart taking all of your stock related queries. But before we do that, the number that you can write to us is going to be flashing on the top of your screens as well as on your screens. Do remember to mention your buy price for the stocks that you're already invested in, and for the ones that you're hoping to invest in, do remember to mention the time horizon that you then have in mind. And on the top of your screens, you should be shortly able to see the number that you can write to us at. That will be flashing on the screens throughout the show as well. But with that, let's kickstart taking all of your stock related queries. Sharmila Joshi is going to be joining us on the show today. Sharmila, very good morning to you. The first one that I wanted to take is actually a query coming in from Hyderabad from Kiran, and she's writing to us about Adani Ports, 310 shares at a buy price of 1,225. So what do you make of this one? Because she's okay to hold on for the next 6 months, but what do you make of it then?
Looking at the valuations, I think it makes perfect sense to hold on. Definitely, I think the stocks have corrected and some correction also has happened in line with what is happening in the markets and what is happening in mid caps. Having said all that, I think that this would be the wrong price to sort of look to exit the stock. My first target would be closer to 1400. So I think stay put till then and then revisit the stock and take a call as to whether you should stay invested.
Very good morning to you, Sharmila, as well as Happy New Year to you. I may have skipped wishing you a Happy New Year. We have a viewer from Ludhiana. Suresh is writing to us. He's a long-term investor. He wants to know about IRCTC as well as Bharat Electronics. Which one should he enter at present level? And if he has to choose among these two for a period of about 3 to 5 years investments, which one should he look at? Both of them PSUs, but both of them are in very, very divergent sector. No doubt BEL may have some sort of, an exposure to metros. But what's your take coming on IRCTC and BEL? Out of these two, which one do you think is a good bet when you're thinking about 3 or 5 years?
Well, I personally would prefer IRCTC. The reason being that overall, we do know that IRCTC has a kind of a monopoly in the businesses that they operate in. And overall, I think if you look at it in terms of potential for growth going ahead, I think there is tremendous growth in that. We are already seeing that the way we've seen the growth in the hotel stocks as well as airlines. So domestic travel has picked up in a very big way in the post-COVID years. We've seen that all the numbers are going up steadily, and I think IRCTC has a lot to offer in that space, and they have some new train lines, etc., coming up as well. Some luxury lines, this that. So all those things will play out in the next 3 years. Also, I think if you were to just compare BEL and IRCTC, I think both stocks are good. It's just that BEL has had a fairly good run up in the whole PSU rally, and IRCTC has had these hiccups, with some issues and what would be the kind of margins the government would take from them, etc. So this stock has had its hiccups, and now it will go up on the basis of how the business does, and BEL will be, to my mind, stuck a little because the entire PSU basket seems to be stuck a little, and the stock has gone up a lot. So from both perspectives, I think IRCTC would be a better bet at this point in time.
Then IRCTC is a better bet when you stack both of these counters then. But the next one that we have, Sharmila, is coming in from Radha Krishna, writing to us from Bengaluru, wants to know about Swiggy. Is there any entry price that you then have in mind when it comes to this counter then?
So yesterday, I think these stocks were in news because they were talking of some quick delivery, whatever. Both, I think, Zomato as well as Swiggy. We have two stocks in this sort of space, and out of the two, I prefer Zomato personally at this point in time. To my mind, Swiggy valuations look a little expensive. So if you were to look at entry, I think you would need for the stock to correct. I think a good 7-8% from current levels to really consider entry. So to my mind, at this point in time, Zomato looks better.
Zomato looks better when you compare it to Swiggy. At this point in time is what Sharmila has to say. And talking about Swiggy, Zomato definitely is breakfast time. Let's actually slip into a break. Let me sip on that coffee. When we come back, we'll talk more about stock queries and also get Osho on board to take all of your technical queries. So don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock related queries. Remember, viewers, you can write to us on the WhatsApp number flashing on the top of your screen. And we have our experts today. We have Sharmila Joshi, who's joined us on the fundamentals, while we have on the technicals Osho Krishan, who's joining us right now. A very good morning to you, Osho. Didn't greet you earlier. So good morning and Happy New Year to you as well. We have a lot of viewers waiting to ask you a lot of technical queries then. So let me get started with that. This one is coming in from our viewer, that is Jay Krishnan, who's writing to us from Kerala. And he wants to know at what level can he actually look to buy Maruti Suzuki for medium term.
Very good morning to all of you, and wish all of you, production team and the viewers, very happy new year. Well, looking at the technical setup of Maruti, then in the last 2 weeks, there has been a significant surge in this counter from a lower zone of nearly 10,800, which has given a kind of a reversal signal in this counter. So I'm expecting that from here onwards, there can be a gradual up move in Maruti from short to medium term time frame. But no doubt there can be some kind of sideways or some kind of a little bit of breather that can be seen. So effectively 11,600 and 500 should be cushioning any kind of plunge that can be seen in the shortcomings in the near period. While on the higher end, the immediate resistance is around the zone of 12,100, which is the 200-day simple moving average. So it will again get some momentum once it crosses the zone of 12,100 on the higher end. So that's the short-term view, but overall the counter is looking very positive. From a broader term time frame, the counter have also has gained significantly and has reversed from its lower zone. So I'm expecting that in the medium term time frame, one can definitely accumulate this counter at current levels, and 13,200 can be seen as the target.
And so that's a take coming in as far as Maruti Suzuki then is concerned. Sharmila, I'm going to come right back to you because we do have Jay writing to us from Mumbai. Wants to know about JSW Energy. 500 shares is what he's holding on to with a buy price of 650 rupees. And the stock, of course, has been in the news, and currently also even today it's taking it on the chin, down 2.7%. So against that backdrop, what do you make of this counter?
So overall, I'm sort of positive on this space and on this stock. I think one of the new or sort of newer themes, I would say, that we have seen over the past maybe 7 or 8 months is the fact that the focus will within the power sector shift to companies which are talking of green energy, renewable energy, etc. And we have seen most of the companies within that space do well. And I think JSW Energy also within its portfolio is managing to position itself in this space. So overall, I'm positive on the stock. Yes, I think in the near term could be a little rocky, but if you're a long-term investor, you should stay invested.
That's a take coming in on JSW Energy or for the longer term, at least Sharmila, you are positive. So this entire fundamental news flow, you don't think will actually shake the fundamentals that it has for the long term?
Yes, I think that this is going to be something that we are going to have to sort of evaluate in the long term. But what I'm trying to say is that the way forward is going to be green energy, and therefore you have to look at stocks which are positioned to take advantage of that. Just as at one point in time there was a lot of fancy for electrical vehicles, and we saw what that did to Tata Motors price, and now it's correcting, and that's it. But what I'm trying to say is that market really latches on to these themes for a reason, because even globally we are seeing that this is a sort of this is a concept that is playing itself out in different ways across the globe, and I think that we will also follow suit. It's just that these kind of concerns will come up because they will have to go through all the sort of regulatory concerns as well. But that said, I continue to be positive on this space.
So that's a take coming in from Sharmila. Given the fact that green energy is the theme of the future, so look at these counters actually given that theme for the longer term benefit, because regulatory concerns and also improvisation from the companies will go on going ahead. Thank you for the view, Sharmila. In fact, I'll come back to you. A very short breather because the query is a bit long for you. So this is a viewer, Nagakumar from Hyderabad, and he has a sizable investment in Tata Motors counters. Tata Group of counters. So he has Tata Motors at 900, Tata Power at 404, Tata Steel at 145, and TCS at 3,846 rupees per share. He's incurring losses in almost all of these counters except for TCS. So what should he do? Hold on to these for the next 2 years, or look to diversify in other Tata Group of companies?
You could do both, very honestly, in my opinion, because while I do like a Tata Motors, it doesn't mean that I don't like, for instance, Tata Tech at this valuation. I like TCS at this price. I also think that Tata Consumer looks good to me at this point in time. So it actually just depends on your patience level and what are the themes which you think could be playing out for the next 2 or 3 years. To my mind, the themes could be Tata Tech and Tata Consumer, which is why I mentioned them. But that said, it doesn't take away from the kind of value that a Tata Steel could add, for instance, going ahead, because we are seeing that globally the sort of metal cycles are a little depressed just now, and which is why you're seeing the direct impact on a stock like Tata Steel. But, because the sort of fate of steel companies or any metal stocks largely depends on the global news flow. If that were to take a turn in the next year and a half, you could see the prices go up again. So Tata Power also, I think, is sort of similarly getting affected the way JSW Energy or any other power stock, the kind of correction you could have seen again. They have built their presence in the kind of in solutions for electrical vehicles as well as renewable green energy, etc. So Tata Power is also a stock for the future. So I think it just depends on your patience level and what you think are the themes that could play out, as I'm saying, in the next 2 or 3 years. And to my mind, both Tata Tech and Tata Consumer do offer you a good opportunity right now. That said, I like all the four stocks that he's invested in, and I think I also own all of them. I think all of them.
Or rather than a whole host of these Tata Group stocks that are looking good to Sharmila. But Osho, I'm going to come right back to you because Pratiksha is writing to us from Oman about a couple of counters, PCBL as well as GNFC, because she's holding on, she's sitting at losses of just about 10%. She can hold on for a year, but time now to average?
See, firstly, for PCBL, this counter have started seeing some kind of corrective phase from the zone of 480, and the support that I'm seeing on the technical chart is near about the zone of 390 and 400 odd levels. So one should wait for the stock price to consolidate, take a breather around the zone of 400, because that also coincides with the 200-day simple moving average. So I'm expecting that 390, 400 should be acting as a very strong support in this counter. So if it consolidates near the zone of 390, then one can try to average the counter of PCBL from short to medium term time frame. The other one was GNFC. For GNFC, again, this counter have also seen a very strong correction and has corrected from the 200-day simple moving average in the short term period. But overall, looking at the trajectory on a broader time frame, this counter has a very strong support near the zone of 500, 520 odd level. So I'm expecting that if there will be some further correction towards the zone of 520, then it will be an apt level to accumulate. Else, one should buy it above the zone of 640 odd levels. So it is a conditional buy, either buy above 640 or wait for some corrections of nearly 40-50 points towards the zone of 520.
All right, so that's the take coming in on PCBL as well as GNFC. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries, so don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. And the next one, Osho, that I have is coming in from Karishma, writing to us from Delhi. She wants to invest a lump sum of 10 lakh rupees, wants to invest in good cement counters or counters from the insurance space. Which ones do you have in mind? And she also wants to know if LIC is an attractive buy at this point.
Yes, overall, looking at the broader market, majority of the counters from the cement sector, Ultra Semco is looking very positive to me, although there has been a strong consolidation in this counter. But looking at the long-term trajectory, this counter has provided already very decent gains, and it is now hovering near the lifetime high level. So I'm expecting that Ultratech will be the preferred bet from the cement counter. Else, remaining other counters are also looking good, like Dalmia Bharat, Ambuja Cements. These counters are also looking very positive. So overall, the cement sector is looking positive to me. So there should be some diversification among the cement spaces at current levels. And I would advise to accumulate these counters in a staggered manner, because the market is not very attractive as of now. So better to accumulate from a longer term perspective in a staggered manner. And from insurance space, LIC, yes, is looking very positive. It has dipped strongly from the zone of 1200 towards 850, which historically have been one of the very strong support zone. So I'm expecting that the zone of 840, 830 should be cushioning any further downside in LIC. And from here onwards, there can be a gradual upside movement in the coming future. So even LIC can be accumulated in a staggered manner from a time perspective of medium to long term.
All right, so those are the that's the take coming in on Cement Pack as well as LIC. Coming to you, actually, Sharmila. Our next viewer, that's Satya. He wants to enter some two counters for a period of about 1 to 2 years. Affle is one of the counter, and the other one is any choice that you have, 1 to 2 choices that you can help him out with, that he can look to invest right now for a period of 1 to 2 years.
Well, Affle is definitely, I think, something that he can go for. We have seen that this, I don't think it's corrected too much, and valuation sort of look reasonable. So maybe since this is going to be a month which is sort of data heavy and whatever, so you could see markets a little more volatile. So if you get it lower, then definitely go for that. I think I've already, in terms of recommendations from my side, I think Tata Tech could be a good recommendation. This is a newly listed company. They're sort of the vertical that they focus on a lot is vehicles, and we are seeing that a lot of electronic and computerization goes into cars. These days, it's no longer a fully sort of a mechanical cluster that you're seeing. There are lots of bits and pieces which are completely electronic now, and Tata Tech will play a big role in all these things going ahead. And it's of course corrected from its issue price, etc., etc. So this could be another interesting stock to look at from the longer term.
All right, then bullish on Tata Tech is the word coming in from Sharmila. Osho, I'm going to come to you with the next one because Shrikant is writing to us from Hyderabad, writing to us about a couple of counters, in fact, Zomato as well as Birlasoft. Now, Sharmila's already talked about Zomato, but from a technical standpoint, then what do you make of this counter? Because 2,000 shares at a buy price of 68 rupees for Zomato and 200 shares at a buy price of 450 for Birlasoft is what Shrikant is holding on to.
See, overall, Zomato firstly have seen a decent correction from the zone of 300, where everybody was expecting it to have a very strong continuation on the higher end. But on the positive front, there has been a decent correction in this counter after a very long period of vertical rally. So such a correction should be treated as healthy in this counter. So overall, although I'm expecting that on the lower end, the correction should get restricted near the zone of 200 a simple moving average, which is approximately 230, 235 odd levels. And from there onwards, we can see a gradual up movement in the coming period. So Zomato is looking decent at current levels. One should wait for another 15-20 points of correction and then can look for buying opportunity in this counter. The other one was Birlasoft. For Birlasoft, this counter has been into a strong corrective phase and has been below the 200 simple moving average from the month of August 24, and there has been no return or respite that can be seen in this counter. But overall, looking at the broader time frame, then this counter have seen a very strong support near the zone of nearly 520, 530 odd levels, and I'm expecting that it is hovering near the support zone. But one should wait for further consolidation in this counter, because in the last 3 weeks there has been consecutive sell-off in this space. So I expect that if there will be any kind of revival or any kind of pullback that can be seen, which can pull it above the zone of 600, then it will be a very strong buying trajectory that it will be in. So one could definitely look to accumulate it above 600, and one who is already holding the position, I will advise to hold it with a stop loss of 520 from medium term perspective.
Osha, I just missed your recommendation for Zomato. What was your take for Zomato? Because our buy price for Shrikant is 68 rupees.
See, overall, I was saying that there has been a decent correction after a very long period of time. So I'm expecting that another 15-20 points of correction can be seen in this counter, which is the 200-day simple moving average around the zone of 235, 230 odd levels. So one should wait for, from there onwards, we can see some kind of buying traction returning back in this counter. So I would say to better stay invested in this counter with a stop loss of 230, because the investment price is already at a very lower level. So 230 will be the apt zone where one should try to hold this position. And in the coming period, I expect the counter to retest the zone of 300.
Would be for someone who's making profit into the counter, right? Because you have our viewer Shrikant who's bought it about 68 rupees, so he's making profit in Zomato. But on the other side, I have a viewer Nagaraj who's actually bought it at the buy price, at the current market price right now, 251. So what should his strategy be with Zomato? Because I'm sure that he's bought it at a level where from there on out, you only seen the stock correct.
See, overall, this view remains the same, because I'm expecting that as we have seen that the counter have already corrected approximately 50 points from its peak, and there is another room of 20 further points on the downside. So I would say to stay invested, because the fundamental of the companies are very positive, and even we have very strong fundamental reports on this counter. So I expect that there can be a rally that can be seen in the coming future. But for short-term perspective, 230 should be the stop loss that one can hold to. And on the higher end, I'm expecting in the short-term period, 275 to 80 should be the target. Once it breaches the same levels, then it can test the zone of 300 also.
Right, so hold is a call coming in for Osho when you talk about Zomato. Don't get perturbed by the move coming in. And also, when earlier we spoke about Swiggy versus Zomato, you had Sharmila who did say that Zomato is a counter that she prefers. So yes, don't get perturbed by when you see such downticks in a particular stock price, especially if the fundamentals are intact, Shreyansi.
Well, absolutely. And that's a quick lowdown coming in on all of those counters, Zomato, as well as the other one that Osho also talked about. But the next one, Sharmila, that we have is coming in from Mrs. Shah, who's a senior citizen writing to us from Mumbai. A couple of counters is what she's looking at. For the long term, Adani Ports, 7 shares at a buy price of 1,497 rupees. And even GAIL at 100 shares, buy price 231 rupees. What do you make of both of these counters? Should she book losses at this point or hold on for a bit?
We discussed Adani Ports a little while earlier. So this, I think, to my mind, is a hold. When it comes to GAIL, I'm not so positive. I think the stock could correct even from current levels. So having said that, in terms of long-term, if you are a long-term investor, you could sort of stay put. My first target would be closer to 210 rupees.
This comes from Bharadwaj, who's writing to us from Coimbatore. Coming back to you, actually, Sharmila, he wants to know about Shriram Finance at current market price. Does it look good to buy right now and hold on for the next 2 to 5 years?
Yes, I think that again, this is a space where we have seen correction given with everything across, whether it is some of the smaller banks, other NBFCs, the smaller finance companies, etc. So, what we are really seeing is that because of the whole thing that we are witnessing, whether it is across FMCG, etc., that the slowdown in consumption, that has sort of played on margins of a lot of these companies. And to my mind, this is not a situation that is getting sorted in a quarter. So you have to bear that in mind. But after, once all that gets accounted for and digested, I think that this is a very good sector. And within that space, this is a very good company. So I think that if you have the patience and you are a long-term investor, you should definitely stay put.
Alright, then if you have the patience and if you're a long-term investor, do look at Shriram Finance, and that's the take coming in from Sharmila as well. Osho, the next one that we have is coming in from Ekambaraya, writing to us from Hyderabad, wants to know about L&T. Do you have any entry price in mind for this one?
See, for L&T, this counter has been hovering from a very long period or consolidating near the lifetime highs from a very long period. If I have to say, in the last 6-7 months, there has been a consistent consolidation that can be seen. But looking at the overall trajectory, the counter seems to take support near the zone of 3,400. So that is the apt level where one could try to accumulate this counter. But on the higher end, it even faces a resistance near the zone of 3,800. So for immediate perspective, 34 to 3,800 is the immediate trading range for this counter. So one should try to buy or accumulate around the support zone and should try to book their profits around the resistance. But once we see a decisive breakthrough on either of the side, then we can see another 400 points of movement on the either side. But I'm basically having a bullish approach in L&T.
All right, so that is the take coming in on L&T. But on that note, we slip into a break on this edition of Buy Now, Sell Now. More stock queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this next query that I have is coming in from Venu, who's a senior citizen, writing to us from Chennai. And he's saying that the copper prices are at a 3-week high. He wants to know your take, actually, Osho, when you talk about Hindustan Copper, because that particular counter is under pressure. It is his buy price around 285 rupees per share. He also wants to know about chemical stocks, that is like Deepak Nitrite. His buy price is 3,000 rupees per share. What should his strategy be on both of these counters, especially when they are actually heavily dependent on commodities?
See, firstly, for Hind Copper, the overall metal and copper space is looking quite weak as of now, and I think this should prevail in the short-term period. So I expect that for Hind Copper, there is a possibility for this counter to test the zone of 220 in the short-term period. But again, we need to review that whether the correction will continue in this counter or we can see some kind of breather or a revival in Hind Copper from a medium-term perspective. But for the short-term perspective, the counter seems to be bit oversold, but still having a bearish view. So until it breaches the zone of 260-65 on the higher zone, I expect that any kind of bounce could be seen as a selling opportunity for short-term traders. But if someone is holding it from a longer term duration, then I would advise to accumulate it around the zone of 220 in a staggered manner. So I expect that there can be a continuity in the lower end, but near about the zone of 220, the counter should showcase a kind of breather in the short term period. And I forgot which was the other counter you mentioned.
The buy price was 3,000 rupees per share.
Deepak Nitrite.
Yes.
Deepak Nitrite has been into a correction, but I expect that the overall fertilizers chemical space can see some kind of decent bounce in the short term period. So even for Deepak Nitrite, the counter have been into oversold territory, but from here onwards, on the technical parameters, we are witnessing a positive crossover, and I'm expecting that in the short or medium term perspective, there can be a decent pullback that can be seen in this counter. Although for short term, I'm expecting a target of nearly 2640, 2650 odd levels. But the time it surpasses the zone of 2650, then we can see a revival or a trend reversal in Deepak Nitrite from medium term time frame. So stay intact with your investment. No need of caution in Deepak Nitrite for the time being. The time it breaches the 2650 mark, we can see a decisive upsurge from a medium term time frame.
Alright, then that's the take coming in as far as Deepak Nitrite and Hindustan Copper then are concerned. Sharmila, I'm going to come right back to you because we have an investor who's not mentioned his name but wants to know about PI Industries. 10 shares, buy price is 3,790 rupees. Investing for the long term. So what do you make of this one then?
Oh, honestly, whether it is chemicals or agrochemicals, this is a space that I do like, and I think that within that, if you were to differentiate between like a PI Industries and other chemical companies, I think PI Industries is a better place. The valuations look reasonable. We've had a fairly good monsoon, so anything that is in agrochemicals, pesticides should have a decent year going ahead. So my advice would be to stay invested.
Right. Stay invested is the call coming in from Sharmila on PI Industries. On that note, thank you so much, Sharmila, as well as Osho, for joining us on the show and resolving all of our viewer queries. And with that, viewers, we're just going to wind down in a short while and buy now, sell now. Before that, here's a ET Now exclusive story for all of you. Sources have told the channel that ride-sharing company, that's Blue Smart, is eyeing a fundraise about $50 million, and the round is expected to close by next month. Sumita is here with all the details. Sumita, over to you.
Yes, we're given to understand, and sources suggest that Blue Smart is closing a $50 million funding round. It's Series B equity funding round, and is expected to close by February 2025. And we are also given to understand by our sources who are giving us this information that Blue Smart has already raised half of this funding round of this total fundraise of $50 million. And of course, with this, the total equity funding of the company comes to about $136 million. Now, this particular funding round, this $50 million funding round, will invite participation from HNIs and existing investors, which basically include Responsibility Investments, Sumant Sinha, MS Dhoni's family office, BP Ventures, Survam Partners, 100 Unicorns, amongst others. And of course, there will be other VC funds as well. Now, remember, just last year in July itself, the company raised $24 million. And of course, it's been on an expansion spree. So you had the company venture into the UAE, and now you have the company venturing into not just in Delhi and Bengaluru, but also in parts of Noida. And of course in Mumbai. Of course, in Mumbai, it launched earlier this year. It's an invite-only service as of now. Overall, the company is, of course, growing on the back of its robust infrastructure, charging infrastructure. Overall, it has over 8,500 EVs, over 10,000 active driver partners. And of course, like I was saying, its charging network includes 5,800 stations across 50 hubs. In terms of ARR for the company for FY25, that amount stood at $95 million.
All right, thanks Sumita for that roundup coming in. But with that, completely out of time on this edition of Buy Now, Sell Now on ET Now, from me, Shreyanshi Singh, Cheryl D'Souza, as well as the entire team that put this show together. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.